Hello students and welcome to our today's revision. Today we are going to talk about the financial statements for non-profit making organizations, also known as not-for-profit making organization. We have been talking about the financial statements for the sole trader, financial statements for the partnership, financial statements for the company, and all those forms of business organizations, they are normally established with one purpose, that is to make profit. What about these organizations that are there in our society that are not to get any profit, but to serve the society, the clubs, the charitable organization, and any other business not business, but any other organization that is established to offer just services, but not to generate profit? How do we prepare their financial statements? And how do they get their income? So for the non-profit making organizations, these organizations, they get their finances mostly from what we call the subscription from their members, especially the social clubs. Those clubs, they normally have members. Those members normally subscribe or renew their membership on an annual basis. At the end of the year, those members need to renew their membership. The amount of money they pay to renew the membership is known as the subscription. And that forms the main source of revenue to this particular organization. You will also realize that most of these non-profit making organizations, they get their finances through the donations. The others, they normally have the gate collection, especially the football clubs or any other club that is meant for sports purpose. At any particular tournament or game, we have the gate collection for the members to come and watch. You also have that in this organization, they have a trading organization or a trading activity within that organization. We can find that if it is a members club, it has like a restaurant, it has like a bar. Those bars or restaurants within that non-profit making organization, they generate profit. The profit from those activities, they form part of the income and other sources of revenue to this particular organization. So in this organization, because they are not there to make profit, you'll find that instead of having a cash book, they will just have a very simple receipt and payment. They're going to have the receipts and payments account. This is a simple account whereby on the debit side, we normally record the receipts. That is the cash received. On the credit side, we normally record the payments, the money paid out. And then they are going to list here. Maybe we received the money from subscription. Let's say it is 200,000. We received the money from donations. Maybe it is 180,000. We received the money maybe from sales. That is the bar sales. Maybe it is 120,000. Those are the receipts. Then on the other side, they record how we spend the money in terms of cash. That is cash in and cash out. Cash came in form of subscription, donations, and maybe the sales from the bar. On the other side, we have the payments. The payments can be in form of maybe we bought an equipment and we paid by cash, worth maybe 80,000. We bought the bar purchases. That is the bar stock, a certain amount. Maybe it is 55,000. Maybe we had salaries that we paid to our employees, 50,000. We had maybe insurance of maybe 10,000. Such kind of payments. So this is the cash that we paid. This is the cash that we received. So instead of having a cash book, we normally have or maintain a simple receipt and payment account, just to record cash in on the receipt side and cash paid on the payment side. Then you realize that in this question, when it is tested in the examination, you will be given the additional information. You will be given the additional information. The additional information, in most cases, you will be given 2 periods. That is the start of the period and at the end of the period. Maybe it is January, the year is 2022. Here we have December, the year it is 2022. Simply meaning that we are going to have the opening balances here versus the closing balances on the other side. So here, on the opening balances, you can have like subscription, accrued, subscription accrued. Maybe here it was 20,000, and on the other side it is 18,000. So this one is accrued at the start of the year. This is accrued at the end of the year. What we mean by accrued is this. By the time we were starting this year 2022, before we are running from January 2022 to December 2022, before we start this year, we had some members who had not paid their subscription for the last year. That is what we mean by accrued at the start. They had not cleared their subscription for the previous year. So as we are starting this year, we are starting with some members having arrears for the previous year. That money. And then the accrued as December 2022, it is now the subscription amount our members have not paid for this year. So that money will be carried over, or that accrued amount will be carried over, and maybe probably they are going to pay the following year. So that is the end of the year. We can have subscription prepaid. Maybe here you are told it is 15,000. Here you are told it is 10,000. Subscription prepaid at the start. A prepayment, it is an amount that has been paid before the due date or before the financial year comes. So prepaid at the start, some of the members had paid excess last year. So the excess at the start, it is the excess for the last year that has been brought forward to be utilized this current financial year, January to December 2022. So subscription prepaid at the start of the year. Members who had overpaid the previous year, so their overpayments will be utilized this year. Then prepaid at the end of the year, maybe you are given here, it is 13,000. It is 13,000. What does that mean? By the time we are coming to the end of this year, ending December 2022, some members have overpaid, and that overpayment will be utilized to the next financial year, which is 2023. So this one at the beginning, they had overpaid the previous year, so it is going to be used this year. This one, they have overpaid this current year, so the overpayment will be utilized the next financial year. Very important for you to note. So you can be told here also the salaries accrued. Maybe here you are told 5,000. Here you are given 7,000. You can be given maybe insurance prepaid. Maybe here you are given 3,000. Here you are given 1,500. Just as examples. And then you can be told equipment. At the start, we had an equipment of, let's say, 90,000. The value of the equipment at the end, it is maybe, the value of the equipment at the end, it is maybe 150,000. And then from there now, you are told to prepare, 1, the subscription account, 2, the bar trading account, C, the income statement, and then the statement of the financial position from these balances. Let us include the bar stock. Maybe here it is 7,000, here it is 5,500. That is just but some information that will guide us for you to know how do we prepare these statements. So you will be given receipt and payment account. On the receipt side, it is cash received. Payment side, it is the cash paid. Cash paid for acquiring the following: acquiring the equipment, acquiring the bar purchases, also paying these expenses for that particular non-profit making organization. Then, if you are told to prepare a bar trading account, it is going to be very easy for you. You are going to come here, you'll say the name of that organization, maybe it is XXX Club, the bar trading account for the year ended 31st December 2022. You underline that. You are going to start with the bar sales. The bar sales, you pick them from the receipt and payment on the receipt side, because when you sell, you receive cash, 120,000. Then you come and record less cost of sales. You less the cost of sales. Under the cost of sales, we know we are supposed to do opening inventory. But for the bar, the opening inventory, you come here, at the end of the year, the opening inventory was 7,000. You add the bar purchases. The bar purchases, you get it from the payment side of the receipt and payment, and we are given there, the figure is 55,000. The figure is 55,000. That one will give us what? That one will give us 62,000, which is the cost of goods available. Cost of goods available for sale. Then lastly, you less the closing inventory. The closing inventory, you go to the bar stop at the end of the year. The closing inventory was 6,500. You less that so that you can get the bar cost of sales. So that you can get your bar cost of sales. So here, the solution will be 62,000 and 6,500. It gives you 55,500. You less from the bar sales so that you can get 64,500. That is what now we call the bar profit. The bar profit. If there is any expense that is related to the bar only, like for example, bar waiter salary, you should less it here so that you can get the bar net profit. So don't forget, the formula or the procedure is the same as the income statement, only that this bar trading account is going to be very simplified. It's going to be very simplified. Sales, less cost of sales. And as I have always said, the cost of sales is given by opening inventory and the purchases, less the closing inventory to get that, but only use the figures for the bar. You get that? That is the bar profit, which will be used as part of the income for that particular non-profit making organization. The other thing that you will be told to prepare, it is a subscription account. The subscription account. Subscription account, it is a revenue account. So the money that you receive from the members as subscription should be credited here. That money will come into our bank. And in this case, that money is this that you received. The 200,000 that we received is now an income. It's now an income. So this being a revenue account, we shall credit. We shall credit the subscription account, and then we shall debit the bank because it is money in. And then now, what we normally credit, as far as these two are concerned, the subscription accrued and subscription prepaid, we only consider those that were meant for this year. Between the accrued and the prepaid, which are for this year. If it is accrued, what is for this year? It is the accrued at the end. It's the accrued at the end. the money that we were supposed to receive this year, but by the end of the year, we have not received. Should be for this year. Put it here. This is the accrued at the end of the year. Put it here, 18,000. In terms of prepayment, what is for this year or what is going to be utilized this year, it is the prepaid at the start. As we were starting the year, some members had paid excess the previous year. So the excess of the previous year becomes now the subscription to be used this year. Accrued at the start, it is not accrued, rather, the prepaid at the start, it is a prepayment that was made in the previous year. So that money has been carried forward to be utilized this year. So we put it here, prepaid at the start. Prepaid at the start, in this case, it is 15,000. Then what you rest here, it is those that are not meant for this year, but were received here. So what was received here, but was not meant for this year, we deduct. And that is accrued at the start. Accrued at the start. This one was accrued or was unpaid the previous year. So some members did not pay the previous year, but in this 200,000 that we have received this year, that money is inclusive. So we rest it because it is not for this year. So in our example here, the accrued at the start is 20,000. This one we rest from this, and then we are going to have the prepaid at end. The prepaid at end. This is the excess that we have received this year, which we shall pass to be used next year. It is going to be used next year, so it is not for this year. That's why we are deducting, which is going to be 13,000. The balancing figure here is what we shall take to the income and expenditure account. And in this case, you add the credit side will be more. You get 233,000. So this side should also be 233,000. So what is the difference? You get that the difference is 200,000. That is what we should take to the income statement. So very important for you to note, how do we prepare the subscription account? The money that is in the receipt and payment account on the receipt side comes here. Then prepaid at the start and accrued at the end, they are added to that because they were not received for this year, or they have not been received, or one of them, this one was received the previous year, this one will be received next year, but because they are for this year, we add them. These ones, they are not for this year, we deduct them. So then, balancing figure here is what we shall take to our income and expenditure as income from the bar. Very important for you to note that. The other thing that I want you to take note on is how do we calculate depreciation? How do we calculate depreciation? Depreciation, you do it as simple as this. You add the value of asset at start. Value of asset at the start. In this case, it is equipment. At the start of the year, we had equipment valued at 90,000. If there is any amount on the payment side of the receipt at payment, it simply means that we acquired a new equipment and paid for it. So you add any acquisition, add any acquisition. In this case, we added an equipment worth 80,000 to give us 170,000. This is now the value of the equipment we expect to have at the end of the year. We expect to have equipment valued at 170,000. But according to the additional information here, the equipment at the end of the year is 150,000. So you will come here and you less the value of the equipment, value of assets at the end of the year, which is 150,000. So you'll find that the difference here becomes 20,000. And this value, we consider it as a depreciation. This one we consider as a depreciation. So note here, the value at the start, I started with an equipment of 90,000. I added an equipment of 80,000. At the end, I expect to have therefore equipment worth 170,000. But after valuation, the equipment that we have, instead they have a value of 150,000. The value that we expect, the value that is now the actual one, the difference of 20,000 is what they have lost. And that is depreciation, which we shall take as an expenditure in the income and expenditure. Very important for you to note that. It is the value at the start, add the acquisition value, then you less the value at the end. The figure you get there, it is the depreciation, which we consider it as an expenditure in the income and expenditure account. Very important for you to note that. Then lastly, how do you adjust the figures for the expenses? When you are given expenses and we have accrued at the start, accrued at the end, prepayment at the start, and the prepayment at the end. It is also very essential for you to have those at your fingertips for you to score very good marks in this question. How do you adjust them? To adjust them, if it is an expense, just a minute, if it is an expense and we are given accrued, this is how you deal with it. For expenses, if there is an accrual, if it is an accrual, like in this case, we had the salaries were accrued. If it is accrual, this is how you do it. You have the salary paid or the expenses paid. You get it from the payment of the receipt and payment. We paid 50,000 for accrual. Then you add accrued at the end. Accrued at the end of the financial year. The accrued for salaries in this case was 7,000. So here we get 57,000. That is what we were supposed to pay this year. You add accrued at the end because that figure at the end was supposed to be payable this current year. And then you rest. You rest accrued. You rest accrued and in this case, the accrued at the start was 5,000. Because this accrued at the start, it is for last year. Remember, anything at the start, it was either incurred or paid last year. So it is not for this year. So we left it. It's not for this year. This one we are adding because, yes, it is not yet paid, but it is for this year. So we add to the amount that was already paid plus what is unpaid but for this year. Then you less this 5,000. We are lessing from 50,000 because in that 50,000, 5,000 is inclusive, but that 5,000 was for the last year. We less it so that now we know the amount that we were supposed to pay for salaries this year only was 52,000. Was 52,000. So note this, we add what is accrued at end, then we less what is accrued at the start of the year. When it is an accrual, not accrued rather, but a prepayment, the opposite will happen. We shall add prepaid at the start, less prepaid at the end. Why? Because the amount that is prepaid at the start was prepaid last year, but it was carried forward to be used this year. It is for this year. Then prepaid at the end, it is that money that we have paid excess this year, so the excess will be utilized the following year. So by the fact that it is going to be utilized another year and not this current year, we less. So it is going to be prepaid at the start, you less prepaid at the end. Like in this case, we shall come here and do insurance paid. Insurance paid is 10,000. Then you add prepaid at the start of the year. Prepaid at the start of the year. which was 3,000. That one gives you 13,000. Then you less prepaid at the end, 1,500. So you will get here, we are going to get what? 11,500. That is what we shall take to the income and expenditure. This one will go to the income and expenditure. Having now understood how we do those adjustments, it is going to be very easy. It is going to be a walk in the park when you solve this question in an examination scenario. Allow me to share with you a question here, and then we work it out. Hello, this is the question. Question number 3, whereby you are told the following is the receipts and payment account for Puna Club for the year ended 31st December 2017. You are given the receipts and the payments and also the balances down there at the start of 2017, at the end of 2017, and then using that information, the students or the candidates were required to prepare the subscription account, the bar trading account, the income and expenditure account, the income and expenditure account. So how were they supposed to handle that question? How were they supposed to handle that question? So for this question, a minute. Sorry for that. I don't want us to do the question number 3. I want us to do question number 2. Question number 2. It is the one that is going to be all inclusive. Hightas Club, question number 2. The following is the receipt and payment account of Hightas Club for the year ended 31st December 2020. As you watch this, make others also benefit from these videos. You can be sharing with them, the video, and also subscribe if you have not subscribed, so that anytime a new video is posted, you can be alerted. So for this particular Hightas Club, we had the receipt and payment account. Then we have the additional information whereby we have the balances at the start and the balances at the end. what the students were required to do here is to prepare an income and expenditure account and also a statement of financial position as at 31st December 2020. So whether you are told or not told, the subscription account you are going to be required to prepare. Just prepare it even if you are not told, so that you can get the figure that you are going to take to the income and expenditure. So in this case, we have the subscription that was received, and then down here we are given the subscription in arrears. Arrears is the same as accrued, and then the subscription in advance, which is the same as prepaid. And then use that information to come up with the subscription account. Then if you are so keen, you'll find that here we have got a bar, because under the receipt and payment, we have got the bar sales on the receipt side, we have got the bar purchases on the payment side, and then we are given here also the bar stock. So we need to prepare the bar trading account. Whether we are not told or not told, the students were supposed to be aware of that. And then we adjust the figures that we have here, and then it is going to be so easy for us to prepare. The other thing that you need to remember, when we are preparing the statement of financial position, we need to determine what we call the accumulated fund. Accumulated fund is the same as capital when it is for the profit-making organization. But for non-profit-making organizations, we call it accumulated fund. And it is the same as capital. How do we calculate capital? We calculate capital by taking the difference between assets and liabilities. And the accumulated fund, we normally use the balances at the start of the year. Balances at the start of the year is what we use. Don't use the balances at the end. So come to the balances at the start here, identify the assets that we had, and always don't forget this opening balance here, because it was an opening cash balance. It is a current asset. Then also identify the assets that we have here, identify the liabilities that we have there. You deduct the two, you get the accumulated fund, which will take the place of capital, and then the other things will be just similar. So let's go and do it. You can take a screenshot so that as I do it on the board, you can be able to follow it. So we start. I start with the subscription account. I said we normally start with the money that we received as subscription as captured in the receipt and payment. That one, we normally say that it went to the bank. In this case, that subscription was 2,200,000. Then what is for this year, we put it on the credit. And what is for this year, we have the prepaid at the start. Prepaid at the start. Under the additional information is given as 110,000. Then here we are going to have the accrued at end. Accrued at the end, which was given there as 180,000. Those two, you include them in the cash received as subscription because they are this year, but they have not been received for this one. But this one was received last year, so we add it to what we received this year so that we can get the total amount that we were supposed to receive. Then here, you put the figures that are not for this year, but they have been received in these 2,200,000. We have the accrued at the start of the year, which is 320,000 from the question. And here we have the prepaid at the end, which is going to be 65,000. Remember how they go. When it is prepaid at the start on that end, the prepaid at the start goes there, prepaid at the end comes here. Accrued at the start comes here, accrued at the end comes here. They like become diagonal. They are on diagonal line. Then now the balancing figure, what we could have written as balance carried down, which is the total for this side, which is 2,490,000. To subtract this, the sum of these two figures, you will get the figure that you are going to take to the income and expenditure, and that figure was coming to 2,105,000. So that now the total can be 2,490,000. And that is the end. The reason why we are preparing the subscription account is to determine this money that we are going to take to the income and expenditure, which is our balancing figure. Our balancing figure, like that. Then the other thing we are supposed to do is to prepare the bar trading account. And the bar trading account, we need to capture the name of the business organization. The name of the business organization was this club was known as Hightas. It was known as Hightas. So we should come here and capture it as Hightas Club. Bar trading account for the year ended. That 1st December 2020. Trading account is simply prepared by sales minus cost of sales. So we shall come here with bar sales. The bar sales in the question was coming to 130,000 on the receipt side of receipt and payment account. Then to this, you come here and you less cost of sales. Those sales that we made of 130,000, they costed us how much? We have the opening inventory. So you go to the additional information whereby we have got bar stock. You take the opening inventory, which is 20,000. Then you add the bar purchases. On the payment side of the receipt and payment, we have what we paid to acquire more purchases for the bar. And this amount is 60,000. This one will give us 80,000, which is the same as what? Cost of goods available. Cost of goods available for sale in that bar. The cost of goods available for sale in that bar. Then you press the crossing inventory. Still under the additional information, the inventory for that 1st December 2020, it was coming to 25,000. Meaning that therefore, the cost of sales is 80 minus 25,000, it is 55,000. 130,000 is the revenue we generated. 55,000 is the cost we incurred in the process of generating that revenue. The difference, therefore, it is the bar gross profit. The bar gross profit, which is coming to 75,000. That is the end of the bar trading account. Then another adjustment that we need to make, it is on the accumulated fund. Let us calculate the accumulated fund. The accumulated fund, we said it is the same as capital. How do you get capital? Assets minus liabilities. So we are going to come here and group the assets together. So keenly use the opening balances. The assets that we had at the start of the year, if you look at the additional information, we had an equipment at the start. January 2020, we had equipment valued at 720,000. The same, we had the bar stock. It is an asset to the business valued at 20,000. The same date we had subscription in arrears. Remember, a revenue that is accrued, a revenue that is in arrears, it is an asset to you. That is your money, though not yet received. To you, it is an asset. So arrears at the start, it is an asset to the business. So we consider that money as 320,000 as an asset at that particular date. Then any prepaid expense, it is also an asset. Accrued revenue is an asset because it is your money not yet received. Prepaid expense, it is also your asset because it is money you have paid in excess and you have not received services for that particular money. So that prepaid rent of 20,000, it is still an asset to the business. And then the cash balance. The cash balance, it is the opening balance in the receipt and payment. At the top there, we have got the balance brought down on the debit side of the receipt and payment. That is the cash at the start of the year. So it is an asset to the business, which is coming to 420. These assets, if you add them, they give you 1,500,000. Then you go and also consider the liabilities. The liabilities in this graph, we had, remember as at the start of the year, we had subscription in advance. Subscription in advance. This is money we have received from some of the members, and actually they have not utilized. It is a liability to us because if those members ask for a refund, we should refund them. So we owe them. Anything that we owe an outsider, it is a liability. So we capture it as a liability as at that date, which is 110,000. Then we have got accrued expense. In this case, it is accrued electricity. Accrued electricity is a liability. It is an amount of electricity not yet paid. Amount of electricity not yet paid as at the start. So we owe the Kenya Power. We owe the Kenya Power, so it is a liability. So the total liabilities here, it is 116,000. How do you get accumulated fund? Accumulated fund is equals to assets minus liabilities. Assets minus liabilities, which is 1,500,000. The figure for our assets, you minus your liabilities, 116,000. You get the accumulated fund. You will get the accumulated fund, which is 1,384,000. 1,384,000. We also need to do an adjustment on depreciation on equipment. I told you, anytime you are told to calculate the depreciation on equipment, even if you are not told, if you are given a figure of equipment on the payment side of the receipt and payment, and then the opening balance here, the closing balance there, you need to use those three figures to get the depreciation. How do you do it? You will come here and you get the opening value of the equipment, which we were given as 720,000. Then you add the acquisition. Any new equipment that we have acquired, in this case, on the payment side of the receipt and payment, it indicates that we acquired an equipment of 110,000. Then you'll get a figure here, which is equivalent to 830,000. the 830,000. So from this 830,000, this is now the value of the equipment we expect to have at the end of the year. But at the end of the year, it is reported that the closing balance of the equipment is actually, the closing balance is 747,000. So you rest here the closing balance or the closing value. The closing value here, it is 747,000. If you rest that, you are going to get the depreciation. So the depreciation for that case, it is coming to 83,000. It is coming to 83,000. Simple as that. Take the opening value, add the acquisition. The acquisition, you get it on the payment of the receipt and payment account. It is a payment. We paid to acquire that. So the opening plus the acquisition gives you the expected value at the end of the year. Then that is not what is actually in the books. In the books, it is reported what we have is 747. So if we expected equipment worth 830,000, but what is reported is 747,000. The difference is therefore what they lost through depreciation. Then still under the additional information, we are given the adjustments for two things. That is rent, because we have the prepaid at the start and the end. We also have electricity accrued at the start and the accrued at the end, meaning that we need to adjust to get the figure for those expenses that were payable that year. So allow me also to do those adjustments. So here, I'm going to talk about the rent. The rent. So how much was paid? Amount paid? Yes. When it is prepaid, when it is prepaid, like in this case, under the additional information, the rent was prepaid. When it is prepaid, you add the prepaid at the start. You add the prepaid at the start because that is what will be brought forward to be utilized this year. So you add prepaid at the start, prepaid at the start, which is 20,000. That one will give you 35,000. Then, sorry, this one was 20, this one was 150,000, sorry. 150,000 plus 20,000 will give you 170,000. Then you rest the prepaid at the end of the year, which we are given 25,000. So meaning that the rent that was payable for that year only was supposed to be 145,000. This one we shall take to the income and expenditure. We shall take that figure to the income and expenditure. Always note that when it is a prepaid and the start, that's the end. Then we have the electricity. Electricity, we also need to do an adjustment, but this time, electricity, some amounts were accrued at the end. So when it is accrued to the amount that was paid, amount paid towards electricity was 15,000. Then you add accrued at end. Accrued at the end, it is 4,000. That one gives you a figure of 19,000. Then you will come here and you less accrued at the start. Accrued at the start was 6,000. If you raise that from 19,000, you will get 13,000. This is the figure we shall take to the income and expenditure. Once you are able to do that, then it is going to be now straightforward. We are going to be picking this figure. For subscription, we take this. For the bar profit, we take that figure. For this one, we take this. We have all the figures, plus the few that we did not require any adjustment to prepare our two financial statements. The income and expenditure account, remember in the non-profit making organization, they don't have the income statement because income statement is for determining net profit or net loss. These organizations, they are not meant to make profit. So instead of the income and income statement, they prepare income and expenditure just to show sources of income and how they were spent. Just that, just that. We don't have income statement because income statement is meant to determine the profit or loss. This is a non-profit making organization. We don't prepare it. So instead, we prepare the income and expenditure. So let me switch to this end so that we can now prepare the full statements. So we start with the first one, ITAS. ITAS term, income and expenditure account for the year ended. This year was ending that 1st December 2020. It was coming to an end that 1st December 2020. So we just capture the income. Very simple to prepare incomes. One we had from subscription. The member subscription. Don't take the figure that is on the receipt of the receipt and payment. Just go to where you made your adjustment. Just go to where you made your adjustment. And in this case, the adjustment for subscription, we agreed that this is the figure that we shall take to the income and expenditure. And you pick that figure. You pick that figure and take it to the income and expenditure. In this case, it was 2,105,000. The other source of income was actually the bar profit, the bar gross profit, which was 75,000. Of 75,000. What else is the source of income there? Go to the income receipt and payment on the receipt side and confirm whether we have got other sources of income that do not require adjustment. And if you are so keen, you will find that we have got the raffle tickets. We have the raffle tickets. We sold the raffle tickets and we generated an income of 86,000. We generated an income of 86,000. If you add this, they will give us the total income. They will give us the total income of 2,266,000. That is our total income. That is our total income. That is our total income. So after getting the total income, you come here now and record the expenditures. You record the expenditures. And the expenditures, here you are going to consider those items that were on the payment side. Those with the corrections or adjustments, you have done the adjustments there. So you take them here with the adjusted figures. And if we had any payment that it did not require any adjustment, you take it the way it is from the payment side of the receipt and payment account. Payment side of the receipt and payment account. So here we had the following. Depreciation on equipment is considered as an expenditure. depreciation on equipment, and we calculated and found it to be 83,000. 83,000. Then we had the rent, which we calculated at the foot there. The rent, after doing the prepaid, we got it was supposed to be 145,000. Then we had the electricity, which we adjusted to 13,000. Anything else? We had wages, that is from the payment side of the receipt payment. Wages is 190,000. Then we had competition prices. Competition prices. And the competition prices, you are given 40,000. If you add all these expenditures, you will get 471,000, which you raise from the total income minus total expenditure. So in this case, you don't get profit. If the income is more than the expenditure, that is a surplus. But if the expenditures are more than the income, we call it a deficit. We don't have profit or loss here. It is a non-profit making organization. So here we are going to record a surplus. We are going to record a surplus, and the surplus is of 1,795,000. That is the end of the income and expenditure account. So it is very simple. You consider the incomes. You will find them on the receipt side of the receipt and payment, but most of them you will have to do adjustments. If we have got restaurant or bar, calculate the profit. If you are given the subscription, incorporate the figures at the beginning, at the end of the financial year to do the subscription account. The balance in the subscription account, you take it here. Then if you have got any other, sometimes you can get donations. They don't require any adjustment. So the income, you will find them on the receipt side of the receipt and payment account. But consider the adjustments that are supposed to be made on some of those. Very important. The expenditures, they are on the payment side of the payment, receipt and payment, but consider any adjustment that needs to be made on some of the figures. There, you are done. Then we can now prepare our statement of financial position for this particular club. Statement of financial position, it is the same format. We normally have assets, capital, and liabilities. Those are the three items we use. So Hightas Club, statement of financial position, as at 31st December 2020. As at 31st December 2020. Let me bring it closer. So what do we have? So what do we have as our assets? The non-current assets. The non-current assets. We have the equipment. This one, because we were given the value at the end of the year, you use it the way it is. Remember, we are preparing now at that 1st December 2020. So we use the balances for that 1st December 2020. When we were calculating our accumulated fund, we used the balances at the start. This time around, we are going to use the balances at the end. We are going to use the balances at the end. So we have the equipment whose value is 747,000. And that is the only non-current asset that we had. Then we had the current assets. Where we have now, you consider the items at the end of the financial year, 31st December. So under the additional information, those items that are in that particular column, those items that are in that particular column, if we can share them here, some of them are assets, some of them are liabilities. So we go by this column here. This is the column that we go by. That is where we have the figures for that past December 2020. We take the assets that we have. Like for example, bar stock, inventory is always an asset. Equipment, it is the book value. We have taken it the way it is. Subscription in arrears, the amount of subscription that we have not received, that is an asset to us. Arrears at the end, it is an asset. It is an amount the club has not received. So that money belongs to the club. It is an asset. But subscription in advance, it is money we received in excess. That excess is not ours. It is a liability. Then we have prepaid rent. It is an asset. When you overpay an expense, the extra is still your money. And then we have accrued electricity. That is a liability because it is a bill that we have not paid. A liability is a debt. So you need to be very careful on that. So in the statement of financial position, we use these figures. But when we are calculating the accumulated fund, we use the opening balances here. Very important for you to note that. So we shall come here and have the current assets. We have the bar stock, which is 25,000. We also have the subscription in arrears. Which is 180,000. We also have prepaid rent. The prepaid rent, it is 25,000. Then lastly, we have the cash balance, the closing balance on the receipt and payment account. The closing balance on the receipt and payment account, that is still our money. To the end of that period, that is the cash that we have, which is 2,271,000. You add this one, they give you 2,541,000. So the value for the non-current and the current, they give us the total assets of 3,248,000. That is the figure for total assets. That is the figure for the total assets in that particular non-profit making organization. Then you come here and you capture the accumulated fund. Accumulated fund and liabilities. The accumulated fund and liabilities. We have the accumulated fund. The accumulated fund, we calculated it. And we found it to be how much? It is here, 1,384,000. 1,384,000. This figure here. The accumulated fund, which we use instead of capital. So come here and capture it like that. Accumulated fund, 1,384,000. Just a minute. Then we normally add profit, but this time now it is known as surplus. The surplus that you got from the income and expenditure, 1,795,000. So the closing capital balance, is 3,179,000. And you capture the current liabilities that are there. the current liabilities, where we have got subscription in advance, subscription in advance, 65,000, and then accrued electricity at the end, which is 4,000. We get here a total of 69,000. So 3,179,000 plus 69,000 gives you 3,248,000. 3,248,000, which is the same as the total assets. And that is the end of that question. So it is as simple as that. Simple as that. The balances down there, note how to adjust them. Note how to adjust them. Once you are able to do that, then you can comfortably handle the question with the non-profit making organization. The non-profit making organization. They don't make profit. They make either surplus or deficit. They don't have capital. Their capital is known as accumulated fund. Then they don't prepare the income statement. They prepare the income and expenditure. But they prepare the statement of financial position to show the assets that they own, the accumulated fund level, and also the liabilities that they owe the outsiders. This is how we do the non-profit making organization financial statements. For now, it's goodbye. So remember always to subscribe and also share with your friends. For now, let us meet in our next vision class. Thank you very much.